you've got questions about money, well, we have the man to answer those questions. Jeffrey Levine from Buckingham. Jeffrey, welcome back to another episode of Ask the Hammer.
It's good to be with you today, Bob.
Oh, it's good to be with you too.
It's actually good to be with you all days I'm with you, but today I feel it's especially good to be with you.
I so look forward to our conversations because part of me wishes I could stump you, which I know I can't, right?
I don't believe that for a second. There's plenty of things out there in this world that I do not know.
All right, I guess. What was Joe DiMaggio's final batting average when he retired?
All right, well, actually, no, I'm just kidding. All right, let's make sure today is not the day. What do you got up your sleeve today?
All right, well, new rules proposed by the Biden administration would require crypto brokers to report information on digital asset sales and exchanges to the IRS and taxpayers. What do I need to know about that?
Well, the IRS is doing this because they want to know how much you made in cryptocurrency. So the bottom line of this is, Bob, the rules aren't really changing. If you sold cryptocurrency in the past and you made a profit, you were supposed to report it as a capital gain. However, because cryptocurrency kind of by its very nature was secretive, was meant so that people wouldn't know, there was a lot of people who made a lot of money in cryptocurrency that didn't report it and didn't report it properly. And the IRS has gone after a lot of these individuals, but in order to help stem that issue or prevent that from being the case going forward, they're now going to ask these digital custodians to report gains and losses in a similar to the way that brokerage custodians or the people who hold stocks and bonds and mutual funds report things like interest and dividends and capital gains to the IRS each year. It makes being a tax cheat much harder.
Sounds simple enough. Anything that we're missing?
Well, I think it's important to remember that this is still an area of ongoing development. New things are happening all the time with cryptocurrency, and rules can change. For instance, for several years now, there's been proposals to change the rules that surround cryptocurrency losses to apply what's known as the wash sale rule. However, that hasn't happened yet. So one of the unique elements of cryptocurrency, whether it be Bitcoin, Ethereum, other cryptocurrencies, NTFs, is that if you have a loss in your position, and unfortunately today, thanks to the crypto winter that we've experienced recently, many individuals do have losses. Well, you can sell your position, capture that loss, use it to offset other gain and up to $3,000 of ordinary income as well, and then sort of buy that position right back at the lower basis. And so it's a very powerful strategy. It's something that you can't do with stocks, bonds, and other securities, but because the IRS to date has not classified cryptocurrency as a security, the wash sale rule does not yet apply to those transactions. So bottom line, if you're into this space, just keep your head on a swivel and make sure you're paying attention to the IRS website, because it seems like just about every month or two, the IRS is coming out with some sort of new guidance on how to treat digital assets.
Yeah, well, as all these folks are reporting gains and losses, I hope folks will start reporting their questions to us. No requirement, but
yes, they should go from digital assets to digital ask us. And that's done by emailing us at askthehammer@buckinghamgroup.com. Again, give Bob and I a shout. Let us know your questions. Email us at askthehammer@buckinghamgroup.com. We look forward to tackling your question real soon.